You've probably noticed something strange happening in the crypto markets lately. Altcoins are quietly starting to wake up. No big headlines, no massive pumps. But behind the scenes, data is screaming one thing. A shift is happening. And when that shift fully hits, it's going to leave most retail investors completely blindsided. But not you, if you stay till the end. Because today, I'm breaking down the exact reason altcoins are reacting positively right now, what's fueling this move, and which ones are positioned to outperform the rest. Let's start with what's really driving this silent rotation. It's not just Bitcoin dominance dropping, it's liquidity migration. Over the last few weeks, we've seen a noticeable flow of capital moving from stablecoins and major layer ones into smaller ecosystems. This always happens before a true altcoin season begins. It's like early thunder before the storm. On-chain data from platforms like Glassnode and Sentiment confirm this. Wallet activity in mid-cap tokens is up over 30%, while stablecoin exchange inflows are flat. That means people are holding again, not selling. Now, you might think this is just a random bounce, but there's a deeper signal here. Institutional positioning. Big players, the ones who don't tweet, who don't announce, are quietly accumulating selective altcoins. They're not touching meme coins or hype plays. They're targeting infrastructure and interoperability. Think projects like Chainlink, Cosmos, and Render. These names have seen consistent, steady wallet accumulation from addresses linked to large OTC desks. That's not speculation. That's strategic buying. Here's where it gets even more interesting. For the first time in months, correlation between Bitcoin and the top 50 altcoins has started to break down. Normally, when Bitcoin sneezes, everything crashes. But now, certain altcoins are holding strong, even growing, during BTC pullbacks. Historically, that's one of the cleanest early signals that a secondary bull wave is forming. It's what we saw in 2020 before the explosive 2021 run. Take Solana, for example. Despite FUD and volatility, Solana's daily transaction volume recently hit record highs, over 60 million transactions per day. And ecosystem activity is surging again, with DeFi returning and new meme coins launching. Then you've got Avalanche, pushing major updates like Avalanche Evergreen for institutional blockchain integration. And Chainlink's cross-chain interoperability protocol, CCIP, is quietly becoming a standard across traditional finance partners like SWIFT. This isn't hype. This is foundation-level building. So why are altcoins reacting now? Two main reasons. First, macro conditions are aligning. Global risk-on sentiment is improving. The Fed's pause on rate hikes, dollar weakening, and liquidity injections from Asia are all signaling a rotation back into higher-risk assets. Crypto thrives in that environment. Second, retail attention is slowly coming back, but not in a mania way. This stage is the quiet buildup, the best time to position before the noise. And let's be real, 90% of people are still watching Bitcoin. They're waiting for another headline breakout before they act. But the smart money is already in, accumulating while no one's watching. That's exactly how generational wealth is built in crypto. Let's talk performance outlook. Based on relative strength indexes, developer activity, and social momentum, these altcoins currently lead the pack. Ethereum, of course, still the backbone of DeFi and NFTs, and with ETF discussions heating up again, ETH's liquidity layer will lift other ecosystems. Solana, still among the fastest-growing chains, and if it holds current levels, a move to reclaim its previous highs is very possible. Chainlink, CCIP adoption is massive. It's becoming the backbone for real-world asset tokenization. Avalanche, bringing institutional-grade tech that traditional finance can actually use and render the dark horse. The GPU-powered decentralized computing play that could explode once AI integration narratives return. But let me give you something deeper. The behavioral side of this rally. Every cycle, investors make the same mistake, chasing pumps instead of rotations. The current altcoin move isn't about hype coins pumping 50% overnight. It's about the slow, consistent trend that compounds into 10 times returns over time. The big altcoin rallies start quietly, when no one's talking about them. You'll see a 5% move, then another. Then suddenly, everyone wakes up. But by then, you're already late. If you're serious about positioning, this is the accumulation phase, the phase where you identify projects with low hype, high activity, and real utility. You stack quietly. You don't go all in. You scale in over weeks, not days. That's how the pros do it. Now, a quick warning. Not every altcoin is going to survive this next wave. The market's becoming more mature, and speculative junk is getting filtered out fast. Tokens with no revenue, no ecosystem, no real use cases will fade out. But the ones building quietly, they'll explode when liquidity fully rotates. If we compare this setup to 2020, we're in the equivalent of the pre-halving build-up phase. Low noise, high development, and steady institutional accumulation. That's why this moment feels so calm. It's the calm before the real expansion. So here's my closing thought. While everyone's sleeping on altcoins, smart money is planting seeds. This isn't about guessing the next meme coin. It's about understanding cycles, following liquidity, and positioning before headlines catch up. The data doesn't lie. Altcoins are reacting, and this time, it's not random. It's the beginning of a rotation that could define the next bull market. And remember, the biggest moves always start quietly. Don't chase the noise. Follow the signals. Because if history repeats, this might be the last calm before the storm.